You are listening to chartingwealth.com for Wednesday, the 24th of February, 2016. We have 4 candles going up, open green candles on our 2-day chart, which crossed over going up on the total market back on the 16th of February. And the markets continued to march up over the last 8 days or so. Now, what it did today was it rolled over a little bit, down 1.23%. That, of course, has not made a change in our big chart yet. When we look at our 4-hour chart, we see the market was down in the morning and then in the afternoon, still above our 2-day trend line. It does appear that the up movement is getting long in the tooth, and the blue MACD, moving average convergence divergence line, is approaching the red signal line. Also, the derivative oscillator is losing its energy and moving down, but we don't have a crossover yet. We simply have some downward movement throughout the course of the day on Tuesday the 23rd. That's all we have. Same thing happened back on the 18th, but then the market took back off on the 22nd, so we shall see if the down move that is happening right now is going to make a crossover going down. What are we looking for? Well, we've had the big market moving up over the last several days, 8 days, and if indeed it continues to move up and it is still strong in the up move, derivative oscillator up higher over the course of Tuesday, the MACD and the signal line still separated far apart. What are we looking for? Well, we're looking for a rollback on the short chart. And then after that rollback, if indeed it crosses back over going up and the large chart continues to move up, that would be our entry point to be a trend follower, which is the safest way to typically get in and out of the market. Now, let's continue to look at things. We're looking, of course, first, as we always do, with IYY. We just reviewed that. That's a total market index fund, tracks the whole market. Let's switch over to SPY. See what's up with the Standard & Poor 500. It, too, going to redraw our trend line just a wee bit. It, too, is up 4 candles moving up, crossed over going up back on the 16th on the 2-day chart. If we revert from that to the 4-hour chart, what do we see? Pretty much the same thing. It looks like it might even be a little closer on the MACD, moving over. Down movement in the morning and the afternoon, technically down 1.26%. The total market down 1.23%. Don't have a crossover yet going down, but that is where we are. Still above the 2-day trend line. Again, looking for the same thing, waiting for there to be a crossover going down, and then a crossover going back up. That is where we'll look to get in. And I'm actually, for those who are watching this on the video, I'm going back to the 12th of February and saying we want to look for a pattern like we saw back then, actually in the morning of the 16th, where the market took off and started moving up, paralleling the up move on the big chart. But that has not happened yet. So hopefully we'll have a down move. Then we'll wait. It's what we call the market backing up as it starts to move down and digest the gains that it's been making. If indeed that occurs, that's when it takes back off again. We want to try to jump in. All right, now let's go back to the 2-day chart and take a look at the Qs. It was down the most as far as the indexes go. It was down 1.65%. Again, it crossed over on the 18th, moving up on the 2-day chart. We have 4 up candles, an okay trend line, actually 5 up candles and a decent trend line. MACD is up and the derivative oscillator is in the positive territory on the 2-day chart. If we revert to the 4-hour chart, what do we see? Well, even more down movement over the course of the day, getting closer to a crossover potentially on the MACD and a crossover on the derivative oscillator, waiting for it to go into the red and then rotate back over. Unless, of course, you might be saying, well, when the market goes over sometimes, doesn't it keep going down? Can't that pull the 2-day chart over? Yes, absolutely it can do that. It can always do that, and we'll just wait and see what occurs. But if it's just a backup, a brief backup on the short chart, and it moves back in the direction of the big chart, that's the key point for us to get in and to look to make a good investment, good trade. And again, what do we do here? We do virtual trades. We are not a stock calling service. We're not giving you trading advice. We want you to learn how to do this. We want you to practice with virtual trades. You can go to any online brokerage firm, set up a free virtual account, learn how to buy and sell ETFs, stocks, commodities, whatever it might be. Once you get good at reading the charts, once you get good at how these things move in waves, and you can do it over and over and over again with virtual money, then and only then can you start making your own decisions. We don't make decisions for you. Occasionally I have somebody write and ask me what to do. We don't answer those questions. We don't give that advice. It's not what we're set up to do. We're set up to educate you, help you learn how to read the charts. Then you can make your own decisions. So lastly, we are now back again to our 2-day chart. We're going to go to gold. Gold was up 1.5% for the day. Continuing on the big chart to slide sideways. It's not rotated over going down yet. Seemed to be getting closer yesterday on the 22nd as we record this on the 23rd after the market closed. It has broken its 2-day trend line and has really just been sliding sideways. Hit its high back on the 12th of February, not close to that since then. And we're continuing to see the market slide sideways. What are we really interested in? See what the 4-hour chart is up to. 4-hour chart rotated over going down back on the 16th. It then pretty much slid sideways a little bit, caught itself up, and then rotated back over. When the market slides sideways, the MACD on the 4-hour chart is not helpful for gold. We saw that happen a few months ago when gold slid sideways back in December. January, it took off again, making some decent moves. But as we've entered into February, it has crossed over back on the 16th going down. Did go down for a couple of days and then sort of bottomed out and is still sort of riding along that bottom and bouncing off of it around the 115.30 level. $115.30 appears to be trying to bound back up, but again, still crossed over, confirmed going down. Now remember, the big trend is the 2-day trend in gold, and it's still in an uptrend. So what might you be looking for? What's always the best way to trade? Well, the trend is your friend. And if the trend on the big chart's in an up move and you see the small chart roll over, now you might be waiting for the small chart to roll back over going up, going in the same direction as the big chart. Then, and particularly if it crosses through this 2-day trend line and crosses over, and the derivative oscillator flips over to the positive, and the MACD flips over to the positive on the short chart, might be a good time to think about getting back into gold, going long on gold in your virtual trade. So continue to watch it. Gold is interesting. We track, of course, gold, and then we track the big 3 indexes that we like, the total market, IYY, S&P 500, as you see with SPY, and QQQ, which is the NASDAQ 100. And again, gold was technically up 1.5% today. That is where we are. That's where the markets have ended on the 23rd as we go into Wednesday the 24th. We thank you so much for joining us. When you have questions, concerns, problems, we love to hear from you. You can follow us on Facebook, Twitter, Instagram, YouTube, you name it. We are there. If you haven't signed up for our newsletter, if you're not receiving every day our reviews, that is our daily reviews, and then once a week our weekly review and forecast, why not? Just go to our website, chartingwealth.com, sign up. You will like it. It will be helpful. We cannot wait to hear from you. Thank you so much for joining us. Stay tuned. Join us every day. Learn, practice, get better, and at some point, take over and do it yourself. Thank you so much. We appreciate you, and we love to hear from you from chartingwealth.com.